Naina Lal Kidwai, again from Davos, one senior global economist told me if there were three things he would do for the Indian economy, it would be find ways to increase rural productivity, look at urban governance, and look at skilling. Now, these are three areas which the budget can't tackle all of this. But if you were to pick one area where you believe the reform thrust now should be there, what should it be?
So I would just go back to an ask that comes every year, and that is the whole area of tax clarity. And it cuts across every industry. So you take the example of the GCCs, big service providers across the world, large employers, 1,600 of them now in India. Is there clarity in every one of their minds on how transfer pricing will work, how ESOPs will work? What is that national framework and structure that they can plan on as they go forward and possibly as we look to attract more? So I do think that the way our tax regimes are very complicated, muddy the works. And it's going to be very critical to have a principle by which we can actually set these frameworks in advance so that companies come in not trying to evade tax, but they get caught in the crosshairs of interpretation and then all the issues that follow. And related to that in reforms is the whole area of dispute settlement. I've seen a statistics which also says that the CITAs, there's 40% vacancies therein. So we need to resource the departments. We need to make sure that the dispute settlement happens quickly and indeed cut down the sheer degree of disputes for which those reforms are internal and actually, I think, quite easy because we're not dependent on the rest of the world or tariffs or any of the headwinds outside. So let's sort these out. In fact, in the same FICCI CEO survey, 80% of the respondents said customs reform. This is very much, again, in our space and something that we've just got to tackle. So looking at the way we handle our own house at times when we can't predict what's happening from outside in terms of tariffs may be important. And otherwise, I agree, as I had also said, exports are critical. Skilling is, of course, important. In fact, Vicky put forward a wonderful idea on a sort of youth skilling scheme where folks at the age of 21 to 30 can be deployed for public services. So they can come in for sanitation, for helping in rural surveys, in various ways, which brings them into the economy, gives them that earning, and anything that comes into the earning mechanism also creates demand, and therefore, I would hope capital expenditure from the private sector.
Where a lot of schemes have been announced in recent times, the internship scheme, for example, was announced, but when you look at the ground, those schemes actually haven't translated into the kind of action. Now, this is not just the center, but the states. A lot of focus is on the union budget. I think state budgets and state finances need to be looked at. But I'll give you, Neelesh, what is that big reform you'd like to see, and then go to Neelkanth.
So the one big reform I would like to see is to set up Ease of Doing Business Commission, a regulatory authority where any entrepreneur who is burdened by compliance rules, regulation, can reach out and coordinate across central, state, and local government to provide solutions to the entrepreneur. It should also have authority to remove many of the unnecessary compliance burden. Ease of Doing Business Commission, a commission where an entrepreneur can reach out 24/7, 365 days a year, is the need of the hour.
Okay, the Ease of Doing Business Commission. We'll try and get your audio fixed in a moment. But Neelkanth, you're hearing these various ideas. As I said, there are lots of ideas, and you cannot fault the Modi government for throwing up ideas. Smart Startup India, Stand Up India. There was an internship scheme announced last time around. A lot of these schemes are well-intentioned, no doubt. But the execution at times, it depends on which part of the country. State finances are a big issue. We focus a lot on the union budget. The economic survey also expressed their concern about the number of states that are experiencing high revenue deficits. Does the budget need to give some kind of a signaling as well to the states?
Let's see what the Finance Commission has to say. Remember that in all of this discussion, we are assuming status quo on the Finance Commission side, and this is around this budget. The 16th Finance Commission will also be submitting its recommendations. So it is quite possible, given that the fiscal largesse, the fiscal indiscipline that is very clearly visible in many of the states is hurting longer term growth potential. It is up to the Finance Commission to actually create weights and measures, incentives and disincentives, which influence the transfers to the states. So uh, uh, it is quite
Because you
possible
see,
that some of those.
because there's a feeling, just to push that, Neelkanth, is that the government's one eye, and it's been said in past budgets, has been on which states are going to the polls. And therefore, those states get, in the budget also, schemes are announced for those states. You saw immediately after the 2024 elections, Bihar and Andhra Pradesh were the flavor of the season. Do we need, in a way, the budget to do that? Or do you believe the Finance Commission should be now looking at much more closely at the way states are spending money? The budget needs to give the big picture.
Exactly. So the budget does not have the discretion. So the center does not have the discretion to allot or allocate specific funds to states in the budget. So the Consolidated Fund of India cannot make subjective decisions. So some of the schemes that got a lot of publicity in the media for Bihar and Andhra Pradesh were about PSUs announcing specific projects. That's not part of the Consolidated Fund. The state specific measures and the incentives and disincentives need to be a part of the Finance Commission recommendation. So if there are revenue deficit grants, if there are specific incentives that the Finance Commission can create, that if your capex to GDP is so much, then you get maybe a few tens of basis points higher funds, which can, in its entirety, can be substantial in terms of the absolute amounts. I think those changes can happen there. The center has created, in fact, this is something the economic survey also flags, that this 1.5 lakh crore interest-free loan for states for doing capex has actually helped support the capital expenditure at the state level. So if this was not the case, and this also comes with certain conditions, if you have to meet certain conditions to be eligible for this, if this was not the case, the state capex would have been a lot lower. Those are some very interesting charts in the economic survey as well. So there are measures. Maybe this 1.5 lakh crores can be made 2 lakh crores. Maybe there's some additional conditions that can be put in. But remember that if you try to go too tight, you are actually creating longer term federal problems. So the one of the reasons the 14th Finance Commission had advocated against too much of discretion being given to the center and allowing more fiscal freedoms to the states was exactly to let the federal polity work. In fact, what I would be a strong votary of is that the states themselves, of course, there's nothing to do with the union budget, but the states themselves focus a lot more on the state finance commissions and start thinking about tier three devolution, because some of the challenges on the urban side can only be tackled at scale. You can have the chief minister drive urban infrastructure and financing for a one city or two cities, but the bandwidth will not be there. So the only way to handle it systematically for 500 and 1,000 towns and cities is to allow tier three devolution to happen. But that's not a topic for this union budget.
Sure. I just wanted to, for a moment, only focus on state finances because, as I said, we focus a lot on union budgets and don't look at state budgets across the country. But